Good afternoon, everyone. This is Brian Wilson. We're just getting started with today's meeting, November 20th. Already towards the tail end of November, getting ready for Thanksgiving. I hope you guys have exciting plans for next week with friends and family. Well, we obviously have a lot to unpack today, so we'll go ahead and get started. Just a couple of rules as we proceed. If you'd please do me a favor and just mute yourself on your end, that would be helpful during the meeting. Feel free to send anything through that you want to on the chat. The way that I'll kind of proceed today is I'll take one or two topics at a time. I'll circle back here to this main room, see if any questions have come in, and then I think I have 4 or 5 topics. So, well, like I said, I'll take one or two at a time and then kind of make our way through it. Probably the place to start is what's going on today, right? And we'll start with that. It's obviously an appropriate topic. And by the way, isn't this gorgeous? I'd love to go here sometime. I think it's in Norway, if I remember right. Yeah, it's in Norway. But if you look at you can see the bridge coming through there is kind of circling the islands. So if I'm not here for one of the meetings, that's probably where I'm at. But if we look at today's trading, obviously a huge reversal. Nvidia on the surface, of course, had good earnings. They have given it up as the day has progressed. Let's take a peek at what's going on here from a broad market perspective. And let me admit a couple people here to the meeting, and then we'll continue. So we look at what's been occurring from a broad market perspective. Market up, I think 1.5%, something like that. So we've moved 2.5% to the negative here as we have progressed during the course of the day. What does that look like from a broad market perspective? Obviously, a lot of potential takeaways, but any discussion point needs to start from a context perspective. And this is where we are from a context perspective right now. We're right in the middle of options expirations. And currently, and this is an older slide, this number I would imagine is probably closer to 8.5 trillion, something like that. So we have $8 to $8.5 trillion worth of equity derivatives. And during expirations itself, those derivatives are going to reset. So anytime there's expirations related activity and we have, let's call it strange trading in the market, and we would look at today's market reaction and we would say that's very strange. What's going on? Options expirations is what's going on. We're in the first day of expirations. And just as a reminder, especially to those who might be new, you can find it on the Edge page under resources. Just go to the calendar and you can see it right here. November expirations were right in the middle of it, 20th and the 21st. So right in the middle of expirations, we're talking probably $8.5 trillion that's sloshing around out there. And we're looking at resets. What do market participants want to do with leverage and hedges? And that has a huge implication on broad market activity. And we're seeing that playing out in the market today. If anyone has inroads to NVIDIA, we'd love to have a discussion with them. Please don't put your earnings reaction the first day of expirations, but that's a whole different story. Speaking of NVIDIA, let's go take a peek at that one for a second. You've seen me in the last couple of market desk notes talking about them. It's the largest company by market cap in the market itself. As NVIDIA moves, it tends to have huge implications in the market itself. Let's back this up. And by the way, this is how you can do that. You can back it up to whatever time frame you want to look at. let's back it up and take a look at the last year. And we're going to circle back and look at a couple of elements right in here, February and March, April especially. I'll show you what was going on there. If you're not familiar with this, you can also go custom range. That's what we're going to do, so you can see it a little bit better. And we're going to the February. I'll start it in January. So just click on custom range and then go where you want to go with that, and then apply it. And once that makes its adjustment, hopefully soon, there it goes. Okay, so what we see here, and this is part of what I was mentioning the last couple of days, NVIDIA tends to have huge moves when it becomes oversold. So we can see back in February, this was actually a 20% move. So from the lows to the highs, 20% appreciation. That was over the course of 13 trading days. So once it started moving higher, it continued to move higher there for a period of time. But then notice what happened. It gave it up very rapidly. In fact, it gave it up. Let's see how many days it took. It took seven days for it to reverse course again. Once again became oversold in March. We had another rally. That rally was 14%. This one took a little bit longer. It took about 2 weeks to give that one up, but once again gave it up again, became oversold one more time. This time as NVIDIA was rallying off of those lows. Let's see, what was the appreciation there? That one was 21%. So huge appreciation coming off the lows there. Very rapidly gave it up, but then ultimately NVIDIA rallied from that point going forward. As I mentioned in the note this morning, when NVIDIA gets oversold, it tends to have some big moves. Now, for perspective, of course, we're talking about a bull market this year. Beginning of the year, obviously, it was a little bit more difficult. Let's circle back to broad market sentiment. We'll look at that beginning part of the year. So what we're trying to accomplish here or think through is NVIDIA, largest player from a market cap perspective. What happens when it gets oversold? So we were looking at February, we were looking at March, we were looking at April. We saw those rapid rises, and then it was giving it up. What was happening in February, March, and April? The market was having difficulty. Eventually, when the rally stuck, obviously we've had a huge rally from that point going forward. But that's what's been happening to NVIDIA this year during a bull market. Let me take you back for a second, and let's go back in time to look at a couple of periods, and let's try to address the question. NVIDIA is oversold. What happens if it doesn't rally? So that's what I want to show you here. And we'll go back for a 3-year look at this one. So here's the normal rhythm. This is the demand cycles that you see in NVIDIA over time. You can see how it's been playing out over time here during this year. These are the demand cycles that we just looked at. Real quick rallies, and then kind of an unravel, real quick rallies and unravel, and then finally the rally actually held. If we go back to a different cycle, and we're going to go back and look for just a moment back in this section right through here, you can see that if we go back in time, NVIDIA wasn't hitting one very often. And part of the question is, what happens if it hits 1 out of 10, but if a rally doesn't stick? How long, might we need to wait in that type of environment? So with that as our threshold, let's go back and once again just take a look at a custom range. We're going to be looking in August of 2023. And I promise you, this is the only kind of weeds that we're going to be navigating today. But I just wanted to share what's happening with the big market makers or market players in the world. So looking at NVIDIA, August to December 2023, in September itself, you can see that it got stuck at 1 out of 10 for a pretty long stretch there. We went from 915 all the way up to 927, so about 2 weeks. And it was moving lower, from 46 all the way down to about $41 in percentage terms. That was pretty meaningful. Obviously a different realm, right? Nvidia at $40 a share versus where it is today. But at times, it can get oversold for a stretch. There, it was oversold for about 2 weeks. I'll go back and show you in just a moment what was occurring to the broad market at that time as well. One other one to show you here, and then we'll circle back to the broad market again. The next one that we're going to look at is March of 2024. And for those just jumping on the call, where the topic right now is what happens when NVIDIA gets to sentiment of one, and what tends to happen in that environment. So that's the topic that we're covering right now. Sorry, that didn't take. We'll do it one more time. So custom range. Okay, so last one that we're looking at here is in August of 2024. You can see that it was once again 1 out of 10, this time from 725 all the way up to 812. So a period of about 3 weeks, and you can see it came under a lot of pressure. So just because it hits 1 out of 10 doesn't mean that it's immediately going to rally. But it in these instances it did eventually rally, but a few of those times it did take a little while. Those two stretches that I showed you there, let me show you what was happening from a broad market perspective. And I apologize for going into the weeds, but I think it does have meaning and relevance, especially since we're talking about such a large player from a broad market perspective. August, this is broad market. When I showed you what was happening to NVIDIA was struggling at 1 out of 10. What was the broad market doing? Well, the broad market was struggling as well. If we look at March 2024, right through here, NVIDIA was struggling. What did the broad market do? The broad market struggled as well. And once again, if we go back to it one last time, just looking at where we're at right now, NVIDIA is currently oversold, and it's been oversold since the 14th. So about 1 week. Can it stay 1 out of 10 for a while longer? Yes, it certainly can. We've seen instances there where it's been 2, 3 weeks at a stretch. So once again, apologize for taking you into the weeds. Hopefully that made sense. Any questions as it relates to that? The main point I was trying to get across was, yes, NVIDIA is 1 out of 10. It tends to rally from these conditions, but sometimes it can take a little while for that rally to take, if that makes sense. And part of the reason that maybe NVIDIA is not getting the desired gains that everyone thought it would get today, it could be just as simple as options expirations, and we'll just have to wait and see how that plays out. I did want to take you over for a moment to our model portfolios. And those who are not familiar with it, if you are a regular subscriber, you're eligible to receive these every morning. Just send me or send Tim an email. And we currently have two portfolios. One is what we call our Edge Focus Momentum portfolio. Let me show you what's happening on a year-to-date basis. Year-to-date basis, it is up about 38% versus the S&P 500 that's up about 13%. It's had stretches where it got all the way up to about 50% on the year. As the broad market has become a little bit more volatile, this is the S&P 500. As the S&P 500's come under a little bit of pressure, well, momentum has as well, which would make sense. So it's been a tougher stretch, but it's still doing very well relative to the S&P 500. If we look at the edge low volatility portfolio, this one has done exceptionally well, up close to 60% on the year, once again, versus the broad market of about 13%. Those who have been tracking along with the low volatility portfolio will know that it's kind of undergone some strange trading here during the last few weeks, and I think I have it here where I wanted to show you kind of a change. Let's see, a little bit farther up. I'm not sharing my screen. Thank you. I do that every once in a while. I appreciate that. Let me come back. Sorry about that, everyone. Oh. Okay, so let me take you back. My apologies. Let me take you back. This is our Edge Momentum portfolio. What we're looking at there is performance year to date of about 38% versus S&P 500 of about 13%. Got as high as about 50% at one stretch as the broad market has come under a little bit of pressure. Well, momentum has not done quite as well, and that makes sense. If we look at low volatility, this has been a better performer. Year-to-date performance of almost 59% versus the broad market at about 13%. Just continuing to do well. One aspect with the low volatility portfolio, though, is that recently it's been having difficulty finding entries. We see where it started to come off. So early part of November, this is what the portfolio looked like, and this was November 7th. Now it was up about 53%. It has continued to gain over that time. But what's also occurring, that was a portfolio of 6 or 7 names. Over time, that portfolio has been shrinking, and those that follow it have seen a tendency that names are just kind of coming out and then going back in like the next day. You exit one, you enter one, and you're just kind of flip-flopping back and forth between names. And part of what's going on behind the scenes, one, is that the portfolio is having difficulty finding names to buy. Right away, that communicates something to you. And also, if we look at part of the criteria for entry, find it here. Excuse me. My apologies. I have the wrong screen up, but part of the criteria for entry has to do with the sentiment trend itself, or excuse me, the divergence. When divergence is greater than 2, I know what the issue is. I'm on the wrong portfolio. We'll stop sharing there for a second. I was on the wrong portfolio. But part of the criteria for that fund is divergence greater than 2, and it's having difficulty finding entries. So it's just flip-flopping back and forth as short volume just changes a little bit. It'll exit one fund and go back into another one, and it keeps exiting and going back into those funds. So just wanted to show you what's happening in those model portfolios. Let's see if any questions have come in. Robin, I'm not sure what your question is in regards to the ETF. Robin's asking, what's the ticker for the ETF? Oh, in terms of the model portfolio, it doesn't have, and if that's what you're referencing, it doesn't have a ticker itself. It's not public in that sense. It's just something that we distribute internally. Anesh asked, what are signs of turnaround for NVIDIA? Would that mean moving out of a one sentiment? Yes, Anesh, I would agree with that. If it starts to rise from one, that would certainly signal better potential here. And just remember that we are in the middle of options expiration, so take today with a grain of salt because we have, potentially $8 to $8.5 trillion sloshing around out there. And sometimes that can have a greater impact than what's happening, with individual stocks. Brad asked a question that I've stepped aside from the Edge portfolio for the time being. How do you decide to stay out and when do you get back in? Brad, I stepped aside uh, when sentiment for big tech got, I'll call it stretched at 8 out of 10. It's hard for big tech to continue to post gains under that environment. That's when I stepped aside, and I'm looking for big tech to firm up, and that's when I'll likely get back in. I was thinking about doing it today, and I was just watching broad market conditions, and I have not yet, and I don't think I will since we're in the middle of expirations. But I'm looking for kind of a firm up in terms of big tech itself, since it tends to control about 35 to 37% of market cap. Robin, did I address your question? That is internally, that's an internal fund. If you're a subscriber, just let me know and I'll get you on the email list. David asked a question about the new download data button in the market sentiment chart. And let me show you what that is in reference to. And Robin, I'll circle back to your question. Robin asked how the investing in a portfolio works for members. So I'll get to both of those questions. So Tim showed you last time from a broad market perspective, and he was on a test computer, and actually it looks like I have it available today. This is my first time I'm actually looking at this. So this is for S&P 500, and you can actually download that information right there. Like I mentioned, you're seeing it right now along with me. So that'll give you that information in terms of broad market sentiment. And what this is also giving you is this is giving you the daily activity. So that is on a daily basis, and it's telling you what this SPY closing price was. So what do I mean by daily basis? If we look at sentiment itself, right now you'll see that our sentiment indicator is at 5.5. That's a rolling 5-day number. Behind the scenes, once again, it's going to have a daily number, and that's what the daily number is. It had moved higher. Oh, excuse me, I'm looking at it for the first time with you. This is correct. That's a 5-day number. That's exactly what you'll see there. Behind the scenes, you will occasionally have us show you what's going on a daily basis. This is what's going on a daily basis as soon as this pulls up. And it's thinking here for a second. So on a daily basis, and once again from the broad market screen, that's a 5-day average. Daily, it topped at 5.7, just starting to make its way lower now, which implies that broad market sentiment will probably top here in the next day or two and start to move lower. There's that 5-day average. Robin, you had asked about, what does it look like on a daily basis when those emails come in? So you'll receive an email. It will look something like this. And in the email itself, it will tell you what stocks to get out of on a particular day and what stocks to potentially, get into. And you can choose whether you want to either do momentum and low volatility, or you could do both if you want to. For a period of time, I was trading in both. If you click on that, that will then take you to that information, and that is what I was just showing you just a moment ago. And that'll come up here in just a second. So that's what it'll look like. And you can go back and see what's occurring over time. This is our momentum portfolio. There's those two names that you would get out of today. There's the names that you would move into. And circling back in terms of that portfolio itself, and I'll show you what I'm looking for in terms of potential entry. I'm probably not going to get back in until we clear options expirations, and I want to potentially see a little bit more firming in big tech. So you can see big tech stopped falling at 3.4. It moved up to 3.5. That's good. It's still below neutral though, and I think that's part of the issue that we're seeing in the broad market right now. But we are seeing some really good short covering right now from a broad market perspective. And you can see, what's happened here. Here's the SPY, here's big tech. As big tech started to move lower, broad market became very choppy. And especially as big tech moved below neutral, the market started to really have a lot of issues. So circling back to that previous question, when I see a firming in big tech and when we clear expirations, I'll be more inclined to move back into the model portfolios, assuming that we do see a firming in big tech itself. Let me see if I've missed any questions here. Okay, hopefully I addressed how the investing in the portfolio works. Uh, can we share the low volatility parameters again? Let me try to go back to that. I'll go back and pull it up before I share my screen here. Previously, I messed that up, so my apologies there. Okay, should be good now. All right, so this is the low volatility portfolio and the criteria for it. We're looking at sentiment that's greater than 5, intraday volatility less than 3%, your market cap range. This is the criteria that's been hitting repeatedly over the course of the last 2 to 3 weeks. It's part of the reason why some of these big tech components go in and come out and go in and come out. You get supply demand divergence that's greater than 2. And then one of the exit criteria is just the opposite when it's 0. So that's what's been hitting, but also behind the scenes, and it's part of the reason that I stopped investing for a period of time. It was having such difficulty finding anything with sentiment of 5 or intraday volatility less than 3 in the market cap range. So it was having difficulty finding entries, and I'm like, that's potentially, a dangerous signal to me. So for a period of time, I stopped investing there. Let's see, Brad, let me see if I can get to your question. Brad is asking, at the end of the day, I've heard you and Tim mention numerous times that you will enter trades at the end of the day. Is that typical, for example, after a day like this? Do the probabilities favor a bounce overnight? Brad, they would, but I don't know. The reason I'm saying I don't know is because it's expirations. Whenever there's anything from a context perspective that I don't have clarity for the next day, it makes me hesitate a little bit. And let me show you what Brad is talking about. And this is so daily trading ideas. And what I will typically do is drop them all in a portfolio, look at them at the end of the day, and if they are in the entry low to entry high, and I don't know how these are doing today, but let's say that open is down at 640, that would be within that range. Is that something that I would look at trading? Yes, absolutely. I'm just a little bit more hesitant when we're in the middle of expirations. Part of the reason for that, those that have been trading it during the last month, are they going to renew their hedges and leverage, on these names? I don't know if they will or not. So that's part of the reason why I hesitate during expirations itself. If nothing else is going on, it's normal trading. Context looks pretty clear. I do a lot of trading the last 10 minutes or so of the day. Robin asked a question. Thank you for your questions, Robin. The model portfolio, we try to send that around 5 a.m. Mountain Time, and then the market desk notes itself. Tim is usually a little bit more timely than me. He usually gets them out around 6. Recently, I've been stretching it to about 6:15 or 6:30. Let's see. Question from Martin. For the two edge portfolios, Tim had commented about trades on tickers going through earnings. Do you change strategy on the two portfolios during options expirations? Martin, I didn't previously, but I have not been invested really for the whole month of November in those two portfolios. And part of the reason for that is once again, big tech got stretched at 8 out of 10 from a sentiment perspective. It's very difficult for big tech to continue to rally under those conditions. So I thought that like until big tech stabilized, I would stay away. But normally I will just let the portfolio do what it's going to do. And we don't touch that portfolio itself. That trades through earnings, it trades through options expirations, and that's been the performance, not touching it. So it does have excellent performance, but you do need to be aware that you could see some anomalies around earnings, and those that have been tracking the portfolio over time, you will see some of those big moves around earnings itself. Question from Joe. Have you thought of applying a broad market demand type algorithm to Bitcoin as it's the biggest player in crypto? Joe would be curious to see if there are any correlations to SPY given all the crypto treasuries owned by the market players. Seems as though Bitcoin is dumping, Spider is as well, and vice versa. Didn't know if it was a tail wagging dog type of situation. Good question, Joe. I don't know how we would do it right off the top of my head. Tim, might have a thought. You can establish a Bitcoin portfolio, and there's different names that you can put in there. I'll share with you what I have in mind. It's not perfect, but it does a pretty good job. And you can take a screenshot here if it's helpful. But these are the names that I have in it right now for my Bitcoin portfolio. Follows the same rules as, demand and supply for all the other portfolios. It's actually starting to stabilize just a little bit. You can see it really sold off all the way down to 2, starting to stabilize. It's still below neutral, but it's there at 2.9. Let's see. I think I've addressed all the questions so far. Thank you for all the questions. These are terrific. Hopefully, I'm addressing them appropriately for you. Let me take a quick moment to talk about what's ahead, and that'll be it for me for today. My market desk note a couple of days ago was along these lines. So broad market sentiment had been rallying, but the broad market SPY had been moving lower. So whenever broad market sentiment moves higher, you expect there to be some type of fruit associated with that. We were not getting any fruit. We were not getting any returns in the broad market. That was a little bit concerning. This would be a very normal rhythm. Broad market sentiment moves higher, and the broad market does as well. It was not occurring here. So that was a little bit concerning. I did mention big tech. Right now, big tech to me is in a value environment. So you have to treat it accordingly. Whenever sentiment is below 5, it's more of a value type environment. You'll tend to get big moves when sentiment does firm up below 5. But the thing is, we don't know whether it will reach 5 and continue higher. So big tech is starting to firm up. Does it continue to do so? Does it march through 5? I don't have the answer to that at this particular time. I mentioned in a note, actually the last 2 notes, that a couple of the portfolios are starting to firm up just a little bit. And I'll share with you one thing that is sometimes helpful to me is I'll take the sector portfolios and I will then take them by their largest components. So for instance, communication services, what I'll do is I'll look at those names, and you can just sort them by market cap. And what I'm doing is I'm just taking off the biggest ones, the largest ones. So I'll do that for each one of the sector portfolios. Sometimes the bigger players will move before the smaller players do. And it just kind of gives you an idea of what may be happening behind the scenes. So let me show you what's happening with communication services. That's actually starting to firm up a little bit. You can see that sentiment is rising. Short volumes actually starting to move lower. And I just grabbed the 9 largest by market cap. We're seeing the same thing happening in information tech. Sentiment starting to firm up a little bit, short volume starting to move lower. Part of the difference between the two, tech is still very oversold though. It's firming up from sentiment that got all the way down to 2. It's not yet back to neutral. It's at 3.2. As far as what happens as we look ahead, I think it's going to be very dependent on big tech. If big tech does continue to firm up, we are seeing short covering there. And if this continues to march higher, the market has a pretty good chance, I think, of marching higher. Any rally, though, from a big picture perspective, I'm a little concerned about January of this year. I've mentioned this in a couple of recent demos, and I'll show you what I'm looking at here. I think I need to move it back just a little bit more. So what we're starting to see a little bit is an overall weakening in demand cycles. And what I mean by that, this is the normal rhythm for demand. It'll march above what we call the red line. It'll move back lower. It'll march above. It'll move back lower. But you can see the consistency there that we had in 2024. You can see the consistency that we had in 2023. Want to show you something at the end of 2021. Demand cycles started to weaken. Sometimes those will take a little bit of time to play out in the market. Couple months later, at the end of the year, what happened? Well, the whole market started to come under pressure. What are we starting to see now? We had that huge move higher back in April and May from a demand perspective. It was like a rocket ship. It took the whole market higher. But look at these demand cycles. You can see very clearly that they are weakening over time. Each one's becoming just a little bit weaker. Could we have a little bit of juice left here for a while longer? Sure, absolutely. But I am concerned as we get to the end of the year. Does this have similarities to what we saw back at the end of 2021? To me, it does. But I could certainly be mistaken. But I would not be doing my job if I didn't share that with you. Bottom line, if big tech rallies here, I could see the market rallying, but I think any rally might be short term in nature, and just be aware of end of year and beginning of year activity. Well, everyone, I think that's it for me today. Can I address any other questions before we take off? If not, I just want to thank you all for your attention today. Hopefully I didn't dig too far into the weeds. I know I did a little bit with NVIDIA, but there was a reason to my madness, and hopefully I was able to communicate that clearly. Well, I will go ahead and stop the recording, and just want to wish you all just a wonderful